Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, a federal budget focused on investments, but does it add up for business? And parsing the budget's plans for the broader economy. Plus, Canadians are ready and willing to make sacrifices for the country. Let's build on that. That's all ahead. First, for the week that was in business, it's time for the briefs. The federal budget delivered what was most expected, a large deficit, more than $78 billion this year, but with it a promise to spend on infrastructure and spur business investment. It also promises to cut government costs by about $60 billion over 5 years, including cuts to the public sector workforce, and it offers new spending of $141 billion over 5 years aimed at spurring economic growth. As promised, the federal government is starting a formal complaint against Stellantis. The dispute resolution process is aimed at recovering the billions the feds have spent to keep the automaker in Canada. Stellantis said recently it will move production of its Jeep Compass from Brampton, Ontario, to a plant in Illinois. Stellantis said the plant is paused, not closed, and that no jobs have been lost. Canadian quantum firm Xanadu will list on the U.S. NASDAQ as a public company through a $3.6 billion U.S. deal with a shell company. Xanadu will receive about $500 million in the transaction. Quantum computing is still in its infancy, and while full of promise, quantum is still prone to errors. U.S.-based Kerr Mining plans to take over Canada's New Gold in a $7 billion stock deal. That puts New Gold's 2 Canadian mines, which include gold and copper reserves, in the hands of U.S. investors. And it comes just 2 months after Canada's Teck Resources agreed to be acquired by Britain's Anglo American. Elon Musk's giant pay package, worth $1 trillion if Tesla hits certain targets, is under attack from Norway's sovereign wealth fund. It's the 7th largest shareholder in the company. Musk has suggested he will walk away from Tesla if the pay package isn't approved. Other large investors in Tesla have signaled that they will support the payout. U.S.-based Ovinativ says it will acquire Canada's NuVista Energy for $3.8 billion in stock and cash, expanding its reach in Alberta's Montney shale gas region. Ovinativ already owns just shy of 10% of NuVista. It was formerly Calgary-based in Canada before its 2020 move to Denver. And those are your business briefs. Now here's a look at the federal budget by the numbers. The budget includes $581 billion of total spending and a deficit of $78 billion, projected to drop to $56 billion in 5 years. Interest spending on debt is $55.6 billion this year. There's $141 billion of new spending in Budget 2025, including $51 billion in new spending on infrastructure aimed at facilitating trade and housing. And there's $81 billion in defense spending. A centerpiece of the budget, part of a $110 billion allocation to productivity and competitiveness, is the Productivity Super Deduction, a suite of tax credits and incentives aimed at getting business to invest in everything from manufacturing equipment to technology. The size of government will shrink by 10% over the next 3 years, or about 30,000 employees. And our population will shrink too, as immigration targets will come down, with a new cap on permanent residents to hit 380,000 a year in 3 years. The budget is intended in part to help Canada's economy become more resilient. Is there enough of what business needs to see to help us get there? Theo Argitis is Senior VP of Policy at the Business Council of Canada. Theo, thanks for being with us.
And great to be on.
So we've seen the debates about whether it's a generational budget, a transformational budget, but importantly, it is a pro-business budget, I think, by any kind of reasonable measure. Is it pro-business enough for you?
It depends on what your objectives are. Mr. Carney's objectives are pretty lofty when it comes to what he says he wants to achieve, which is an increase of $500 billion in private investment over the next 5 years. That's, Amanda, that's about a 20% increase in business investment from current levels. That is an incredibly ambitious target. Mm-hmm. And even though you're absolutely right, there are a lot of good things in this budget. There are a lot of things that we like. In particular, the emphasis on the economy, just for starters. I mean, that's a change. And the government seems to be paying attention, listening to businesses, which we like as well. But if their objective is to increase business investment by 20% on an annual basis, no, this is not enough. This budget standalone it is not enough to increase private investment to those levels because it's just not that transformative. The objective is transformative, but the budget itself doesn't meet that objective.
Fair enough. What would you have liked to have seen if you were adding to the policy mix here? What would that look like?
I mean, that's a good question, and you know, there are a lot of really good ideas out there. There's an opportunity to be creative if you really want to make a difference. I'll tell you how I see it, Amanda. You know, we are in a situation where I'm really concerned we're kind of trapped in this like low investment economy, which reflects, you know, all the uncertainty out there over the last year or so, but also reflects a decade of disillusionment from businesses, right? They've really struggled to kind of see, the positive landscape in Canada from an investment point of view. So I think that we're at a situation where incremental change may not be enough. You want something a little bit more big bangish to kind of, jar the economy a little bit, to kind of get to change that perception that Canada is not a great place to invest. So I was looking for something bigger. Yeah. I mean, you know, could it have been something on the tax side? I don't know. We didn't see any significant tax incentives for businesses in the budget. And even though we really think some of the signaling on the regulatory side is positive, it's still just that, it's signaling. So we haven't seen any kind of major change in policy that would really make a difference to how corporate boards see Canada as an investment destination.
So one of the things, of course, that the government wants to do is increase trade. There were things in this budget aimed at facilitating trade, spending on trade infrastructure, new trade, organizations, more money for EDC. Did all that add up to something that you think might actually help get us to the lofty goal of 50% non-U.S. trade by 2030?
I mean, that's the diversification of trade is going to take a long time to happen. I mean, the best way to do it is through energy, getting our energy to markets outside of the U.S. Yeah. And that's going to require years and years of, even if we get the regulatory changes and we get the tax treatment that businesses want, that'll be, many, many years in the making. So we're not going to see anything immediate on trade diversification for Canada. What the focus should be on is actually resolving the trade dispute with the U.S. And making sure that our access to the U.S. market continues going forward.
Theo, so good to have you for this. Appreciate your time.
Thanks, Amanda. Great chatting.
Theo Argitis is Senior VP of Policy at the Business Council of Canada. Coming up, we're talking taxes and business investment in this federal budget. Stay with us. Welcome back. Well, the budget includes a host of tax credits aimed at spurring investment. Will that be enough to spur business to action? Dino Infante is national leader of KPMG's private enterprise tax practice. Dino, thanks for being with us.
Thank you for having me.
So there was a hope, I think, by the business community that we would see some kind of real tax reform. Let's start with your overall impression of what we got in this budget. We obviously got a lot on the tax front, but did we get kind of reform, anything kind of material?
Well, this budget comes at a time when Canada is facing significant economic challenges, Amanda, and certainly also while there's very challenging negotiations with our largest trading partner, all while CUSMA's sitting out in the wings. I would call this a true business budget, a budget that is encouraging investment in Canada, building up the Canadian economy, and the ability to for businesses, private enterprises, domestic investors in Canada, foreign investors, to invest their capital here in Canada and keep it here in Canada, in this great country of ours. And in that respect, government's delivering on some very big, important investments in infrastructure and spending to ultimately help build long-term value. And in respect of some of the comments you're making is spending. There's been some significant spending cuts, but also some personal and corporate tax measures. And the way I would sum it up if I was to put it into one word and borrow that word that was used in our firm's webcast yesterday, federal budget webcast that Bill Morneau and Goldie Hyder spoke to, is execution. And execution's key. Dealing with some of that low-hanging fruit to kind of get the flywheel moving and get some with our economy.
So on that front, there are an extension of existing tax credits. Were you happy with what you saw? Do you think it will go towards improving our productivity, which is how the government is framing it?
Right. So from a corporate perspective, there are two primary measures that came into play from a corporate tax perspective. One, the immediate expensing of manufacturing and processing equipment, which is quite a significant measure that'll apply to manufacturing and processing businesses. And the second measure was the scientific research and experimental development measure, which essentially expands the expenditure limit and encourage Canadian businesses to conduct SR&ED activities and create intellectual property here in Canada. So I think those two measures are welcome changes.
And I guess the question that we don't have the answer to yet, Dino, is whether businesses are likely to take up the opportunity here. Is it your impression that they're primed for that? Business investment has fallen off a cliff in recent years.
It certainly has. And as you said, productivity is key here. So really, and as I said earlier, execution. So what the hope is here is that ultimately businesses are engaged and are investing here in Canada to stimulate the economy. Ultimately, let's find those quick hits and as I said, get the flywheel going. So ultimately, it's long-term productivity and growth is being met.
Dino, so good to have you. Appreciate your time today.
Thank you very much.
Dino Infante is national leader of KPMG's private enterprise tax practice. Well, will the incentives in this federal budget for businesses make a meaningful difference in how they behave? Martha Breithout is a partner in credit and incentives at BDO. Martha, thanks for being with us.
Thanks for having me, Amanda. Very excited today.
And I wanted to check with you, actually, first about whether businesses had already taken up the government on these kinds of incentives. Some of these have been in place for about a year and a half, and I was curious to know what you've seen in the market. Are these accelerated depreciations, these tax credits, and some of them are big, right, 100%. Has it spurred business to act recently?
So I'm finding in the market, it's actually education first. So with a lot of these programs, companies have to understand what's available and then make that business decision to actually implement these technologies. So there is a little bit of a delay, but now that the program, as you say, has been around for about a year and a half, we are seeing uptake. So since January of this year, we've been able to actually file claims. So it's still been a very short time frame, but in that, 10 months now that we're coming up to, we've seen tons of use cases. We've seen an uptick in companies actually asking, how can the government support me in what I'm doing in my business? So I think it is hoping to hit the target.
So that's good news for the government, which is hoping, as it says, that it's going to catalyze hundreds of millions, half a $1 trillion in investments. Would you say that the pieces are in place? When you looked at this budget, were you excited by what you saw on behalf of kind of the business community?
Yeah, that's a great question. So I think, and we've heard it in the previous discussion, so two of the things that I think businesses are looking for is, number one, tax reform. So a little bit more around the requests that CRA is providing and making those streamlined and using technology to assist in those audit environments. So tax reform is number one. And then I think number two, businesses are really looking for certainty. So obviously in the environment that we are currently in, a lot of change is happening, but they need their governments and the government programs to remain stable so that they can rely on them again to make those business decisions. So what we saw in this budget was actually that. So full focus on both numbers 1 and 2. And so if our number 2, we're seeing those extensions of credits, we're not seeing things change. We're seeing expanding of programs, we're not seeing them eliminated. So it's given the 23 and the 24 fall economic statements a little bit more weight because now those are effectively in our 25 budget. So helping businesses to say and understand that, yes, you, the government, said you were going to support me in these types of acquisitions. And now here ratifying those 23 and 24 fall economic statements is great to see on that front.
And of course, one way to instill confidence is to say you're going to get the money back this tax year. Hopefully that gets dollars flowing fast. We need that in the economy. There is still, of course, this overhang of the trade uncertainty, and businesses have felt it. And for a lot of them, and this goes back some time now, they've really waited before they'll invest to see what's going to happen. Do we still have that challenge? We don't have a new trade deal yet.
Yeah, and for businesses that are in that scenario, so my advice, and I think what our firm is suggesting as a whole, is really we need to do more together. So what we mean by that is collaboration and actually implementing some of these projects. Again, the government is here to support at both federal and provincial levels. And as we've also heard, a massive federal opportunity with the new super deduction. So that is specifically geared towards manufacturers and processors to invest in physical capital equipment and building. So really trying to move the needle on making these projects into the ground and actually turning on that equipment and getting it productive for our country.
So good to have you, Martha. Appreciate your time.
Thanks for having me.
Martha Breithout is a partner in credit and incentives at BDO. Coming up, does the budget build in generational inequity? That's still ahead. But first, fast fashion retailer Shein certainly made some noise in its brick and mortar debut in Paris. In partnership with department store BHV, Shein was met with protesters and also long lines of shoppers eager for bargains. The unlikely pairing in the capital of haute couture was even further complicated by a scandal involving sex dolls sold on Shein's site. The dolls have been removed, but the controversy may be the hottest thing about this fashion brand. We're back after this. Welcome back. Well, this was called a generational budget, and it sure is, at least when it comes to the debt being logged for future generations to pay. Paul Kershaw is founder of Generation Squeeze. Paul, thanks for being with us.
Good to be with you.
And I noted that, that as you were quick to point out, this really is burdening future generations with new debt. And there is something that you have pointed out before that could help pay for this, and it has to do with how much money we currently send to seniors. What's the math on how seniors are actually taking a bigger share of the pie than they might?
Well, if we look at the spending growth projected into the 2025 budget, between now and 2029, we're going to see old age security get an extra $28 billion of annual spending. And people need to recognize that that's a massive amount because by comparison, housing, which is such a dominant domestic economic issue, is going to receive an extra $1.6 billion. That's like so much smaller than OAS. Childcare is going to get less than $3 billion. Post-secondary, a couple billion. So the affordability issues that matter for younger people are definitely not receiving the same level of investment right now. And that might be okay if OAS was disproportionately going to eliminate seniors' poverty. But there's actually about 400,000 seniors who remain below the official poverty measure, while OAS is delivering an $18,000 subsidy to households that already have $182,000 of income. And I think in this moment of elbows up, in this moment where our prime minister is foreshadowing it's a time of collective sacrifice for the national good, we're going to need to ask those who are financially secure in retirement to take a little less OAS so the savings can be repurposed to eliminate seniors' poverty, address affordability issues for their kids and grandchildren, and trim the deficit.
We know this is a political hot button because seniors vote. Collectively, they're a powerful group. In this particular case with a minority government, the Bloc Québécois had actually made transfers to seniors one of their demands to support the budget. The government didn't do that, and they don't need that support necessarily, but you can see that it's a hot issue. What the pitch you're making is this isn't all seniors. It's not impoverished seniors. It's wealthy seniors who even they might agree that the clawback should happen at a lower level. Why do you think it's so hard for this change to happen?
Well, I think that there is a political caution right now, in part because maybe they're not recognizing we're talking about 20% of seniors being impacted, those who have six-figure household incomes. They may not be wealthy, but they are financially secure. And what we have going for us is we know that Pierre Poilievre, when his party was last in power, talked about the very issue I'm describing. The Prime Minister, in his book Values, has anticipated the very issue that I'm describing. And so rarely do those two leaders agree, but now that we have their convergence on the diagnosis of the problem, we need them to show the courage to act on the cure. And polling shows 3/4 of Canadians support the idea of reforming OAS's clawback level. You have the Globe and Mail editorial board, the publisher of The Hub, the lead reporter for the National Observer. That's left, right, and center. You've got poverty groups that are converging with the C.D. Howe and the Fraser Institute on this issue. That is rare political convergence. We should use that opportunity to transform what is absolutely driving the deficit more than any other line in the budget.
I do want to ask you, while I've got you, Paul, affordability, especially for younger people, is top of mind. Did you see measures here that help that? Did you feel like that was addressed in this budget?
Well, I had anticipated a generational investment in housing, and I was made nervous by the fine print about the capital investments for housing, which actually show by 2029, the capital dollars for housing will be smaller than in 2024, which then raised for me the alarm bell, like, oh, that's because the National Housing Strategy is coming up for renewal around 2027, and we desperately need this federal government to renew it. And so if they renew it, I will be hopeful, but right now the fine print make me nervous on the housing piece. Yep. And then all of the affordability issues for young people, childcare, post-secondary, youth employment, housing, they're all so small by comparison with OAS. And until we remedy that gap, we are not going to make this budget work for young and old alike.
Paul, so good to have you for this. Really appreciate your time.
My pleasure. Have a great day.
Paul Kershaw is the founder of Generation Squeeze. Time for the takeaway and striking while the patriotism is hot. Canadians are well aware that our economy is under threat. Our largest business partner is changing the terms of our contract, and like any single-source supplier, we are left with limited options. Exploring new markets and forming new trade relationships is our best course, but that takes time and money. The good news? Canadians are also willing to take the hit. A recent poll done by Abacus Research for The Logic showed that 71% of us will accept slower growth if it means ending America's dominance over our economy. It's a sign that self-reliance is seen as a worthy goal, even if it means it costs us in the short run. Of course, this only works for Canadians if the investments we make and the sacrifices that go with it get us somewhere better. The Prime Minister has a stated goal of diversifying Canadian trade away from the U.S. with a lofty target. 50% of our trade should be non-American by 2030. To do that, we will need more than just new trade deals. We need a new way of thinking by Canadian business and more support by the agencies already set up to help us. Of course, the low-hanging fruit of trade diversification is more energy. Oil and gas to Tidewater will send our overall export numbers higher, might even make our economy look more prosperous, but it won't make individual Canadians more well off. For that, we need to rely on our own ability to create, innovate, and manufacture, and then sell those things to each other and to other nations. The urgency around doing that is real because however we resolve our trade dispute with the U.S., the blinders are now off. We see our vulnerability to the one big customer, not as an advantage, but as a threat. Turns out that free trade wasn't the catalyst to make us more competitive, but maybe trade barriers are. My takeaway? There's a big job ahead for this country. The good news is, it seems that most Canadians are showing up to work. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.